Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So did you know that it's actually best to sleep naked at night? And some people also prefer looking at charts naked, so let's take a look at the 4-hour Bitstamp. You can see here, immediately, it should be obvious to you that we got a flag situation here going on. Flag, pennant, whatever you want to call it. The first thing you should do once you see this formation is, that's right, check the volume. And what you should see is a descending volume profile. You don't really get that here on this time frame, but it's certainly not any other type of profile. It's not ascending, and it's not just like all over the place. So it looks descending enough here that I'm okay with just calling it a descending profile. So we have a chart pattern that says bullish continuation. We have a volume that sort of matches that. Let's check the oscillators. RSI doesn't really tell me much here, and Stoke never tells me much. So that's that. Although, you know, Stoke has crossed bullish and it's reaching for the threshold. I don't know what else to say about Stoke there. If we look at Heiken Ashi, we can see with 4 hours left to close that we have two green candles here, this being the third. So had you been watching all 7 of the other videos at this point, I've been mentioning Heiken Ashi over and over again. The conditions always being 2 or more of the same colored candles with a close and open above the previous close and open. So we're currently getting part of that. The caveat to that being the chart pattern or consolidation pattern should always take precedent over the candles themselves. So, you know, for instance, here we're getting 2 green candles. You don't know it's a flag at the time, so you could have entered here and you just would have been in this trade, or you would have been stopped out. When I see like 5 or 6 doji, I always get really nervous that it's just going to go south. So, you know, that would have had me concerned should have been long. And if we look at the 5200 again, it keeps holding a support on the 50, which tells me that this is leaning bullish over bearish. You know, it could go back to 970 in 4 hours, but it's certainly leaning bullish over bearish. If we look at cloud, that cloud matches the sentiment of the flag, which is price has currently broken up from this resistance. You know, you can draw this in if you want. I'm not going to, but the point being, we're in the cloud. We've entered the edge-to-edge territory, one of my favorite trades ever for any market, any time frame. Higher is always better. So basically you want a candle close in the cloud. Your target is on the other edge of the cloud. It doesn't get simpler than that. Your stop is either the Kijun, in this case 1005, or 986, depending on how much pain you want to take. I actually have a long opened currently that I opened this morning. A little early based on the edge-to-edge stuff, but the stop is at the bottom of the cloud, actually, 985. I also have bids at 1010 should price you know, droop down and then shoot up again. So depending on how it looks in the cloud, you can either just enter and then also place bids, or just place bids and not enter. I always lean towards entering, because once we enter the cloud itself, that says momentum is flipped to the point where we're currently entering previous resistance. And lastly, there is a beauty of a harmonic, which I called a bat yesterday incorrectly. This is a butterfly. Again, the names don't matter. The point is I'm looking for 1.27 here. I'm looking for 886 here. It actually looks better on Brave New Coin's BLX index, an article I just finished writing. You'll see that tomorrow or in a few hours here. the point is this completed on the 25th. The target at that time was always this zone here. So once this completes and you're certain enough that this is the bottom, you just fib this out and you get this as a target. And the 50% is always the target, so it's really, you don't really need the harmonic to tell you that. It just adds to the confluence, if you will. Let's just turn on pivots real quick. So you can see there's no pivot resistance. 1180 would definitely be a zone I would watch after this if it keeps going. But I'm also expecting a head and shoulders type deal. So shoulder, head, and possible shoulder here, or possible diminutive hunchback shoulder type situation here. All right, so that was the Bitcoin, and let's take a look at Vitalium. And immediately, just with the candles, I'm thinking this is a little droopy. It's a little droopy here. Volume again, descending volume profile. So that matches any chart pattern we should see. And again, you should see a rising wedge here. Now, there's some debate usually whether it's a rising wedge or an ascending triangle, which is a bullish continuation pattern. There's some nuance between deciding which is which. I just like to use whichever fits my narrative at the time. So currently it's a rising wedge, and I think it's going to break down pretty heavy. Nothing new. I've said this for a few days now. The 200 keeps rising, but overall I still like this zone here. Now it may pull back super heavy and overshoot the 200 into this zone and then close somewhere, at the 200. I've seen that before on Bitcoin plenty of times. You can see it's starting to close outside of this diagonal support, this arbitrary diagonal support. So will she or won't she? And then that's the 50 as well. I forgot to put that on there, but just to show you, it may bounce here back up to the next diagonal resistance. Heikin-Ashi has been pretty noisy this whole way, again, because the chart pattern should take precedence over the Heikin-Ashi candles. But you can see these past two candles have been much thicker by many magnitudes of the previous. So this tells me it's leaning bearish, which fits the narrative. So if you're long, if I was long right now, I'd be concerned. If any of you are long, I'm concerned for you. And then just thinking about Bitcoin and Ethereum, if Bitcoin goes up and Ethereum goes down, that kind of makes sense. So as far as the ratios are concerned, and you can see for the cloud, it's not close to close your long signal, which would be the TK cross. But again, like I've said for the past few days, it's gonna go sideways and just drift down slowly, and then play around in the cloud, and then just boom, hit this level, more likely than not at this point. And again, there's div all over this, higher highs and lower lows, or lower highs in the oscillators. Stoke, the signal you'd be looking for here is a cross, a bullish cross. But again, it might cross bull and go back to 20 and then just bounce around. So whatever that means for Stoke, it is what it is. And I've said this as well before, but I think bids here are safer than a short. So maybe if you're like per account, you would be 35 short, 35% short, and then 65% bids down here, something like that. I still think overall is a strong bull trend. It just needs a pullback for sure. And let's go to Dash here real quick. So Dash, again, like I've been saying the past few days, the biggest thing I'd be looking for is the cloud signal for a short entry. So your short entry was here on this candle when it closed below the cloud. The one issue with this current entry is that it's pretty far away from the Kijun, which is the mean. So typically, like I said yesterday, you'll see a push into the cloud support and then regain of bullish or bearish momentum, and then it drifts down again. And it may push hard and then pull back. Usually it pulls back to the Kijun. So as soon as Kijun gets below the cloud, that's where your asks want to be. Now it's certainly safe just to short this with a stop at the cloud currently. You can see you're waiting on the cloud itself to turn bearish. So that would be the last signal of the 4. The 4 being price below cloud, number 1. Cloud being bearish, number 2. TK cross being bearish, number 3. And lagging span below price and below cloud, number 4. So you can see if you're not long, if you're not short right now, because I just made a video and you're watching it and you're waiting for me, that's fine. What you're waiting for now is this cloud to flip bearish. Oscillators certainly look like they're bottomed out, but it's Dash after all, so who knows. And there's a possible harmonic here that I'm not going to draw again because I don't really believe in it. And you're getting descending volume here, whether or not that says anything, I don't know. And if we flip to Heikin-Ashi here, let's turn off the cloud. You can see all these red candles with closes and opens below the previous, so that's as good as an entry signals as you're going to get. You know, maybe if you waited here, and again, you're looking at these 2, 3, 4 candles in a row, and pop the cloud back on, you can see how that matches the Kumo breakout to the downside for the entry signal. So maybe you want to use cloud and Heikin-Ashi together. You're getting 4 red candles in a row with a Kumo breakout. That's a pretty strong entry signal as far as the short's concerned. If we flip on B-bands, which I do only because I talk about them in the video, I wouldn't have otherwise because it doesn't really look sideways to me, but the valuable information you can gain here is that price is walking down the bands. And just like it walked up the bands here, walking down the bands just means bearish continuation again. Just echoing everything we're seeing here. No divergence between signals as far as that's concerned. And if we pop on the yearly pivots, you can see how it blew past R5 here. Pretty far actually. And you'd expect the support to be somewhere in here, 0.60628. Which I think I said yesterday, but I forget why I said that. Alright, so I remembered it was the harmonic that I did draw on left on here. So again, this would be a bullish bat. 886, 886, that's a bat. And that's, again, 628, 627, 626, something like that. This is the 5200. It doesn't tell you much at the moment. Again, everything's still bullish. It just needs to chill out for a little while. It hasn't touched the 200 since February 7th. So it was due for pullback anyway. The bear flag broke down as expected. So again, if that popping the cloud back on, you can see bear flag was bearish, Kumo breakout was bearish, Heikin-Ashi was bearish. Use all of that to your advantage as far as a confluence for an entry signal. And again, the sizable short entry would be across of the cloud here, a Kumo twist as it's known. So that's all I have for today. Bitcoin edge trade 1104, currently active with a stop at 986, bids at 1010, stop at 986.85 as well, with an active building inverted head and shoulders. ETH is currently breaking down a rising wedge to probably the 50% or 200 EMA level, which is like $35. Dash currently Kumo breakout to the bearish territory. You're waiting on the bearish Kumo twist. Heikin-Ashi has been bearish for many candles. So like, dislike, comment, share, subscribe, hit me up on Twitter, Telegram. Don't be afraid to say hi. I like the videos, or I hate the videos, or can you talk about this more in your videos? Oh, that reminds me. I had a fan ask me to talk about ARC real quick, so let's pull that up. So this will be for the dedicated folks who watch it all the way to the end. Yeah, really, there's nothing much to say about ARC other than it really pulled back hard to the 50% basically just by eyeballing this. I'm not going to attempt to use the tools on this website, but something else to notice, I always talk about the triangle point being the support resistance horizontal. So that's currently the case here. Nothing much to say. If you want to buy, go for it. But I would just leave well enough alone. Stay off Bittrex and stay away from ARK. Happy trading.